First of all, thank you everybody for coming. Welcome to our seminar. It's on U.S. expat financial issues. So if that's what you were expecting me to say, you're in the right place. We have a panel presenting tonight. Our firm, Euro-American Financial Advisors. We have J&M Tax Advisors with Margaret Conklin and Jason Matthew, who specialize in compliance tax consulting services and particularly for U.S. tax returns. Also, Raquel de Matos Esteves from RME Legal, and they specialize in relocation, legal issues, immigration, real estate, taxes on the Portuguese side. So what we're planning on doing is everyone's going to talk about their own topic. We can introduce ourselves more as we go through that. And also I have to read a little disclaimer here before we start. The information presented in this event is for informational purposes only. It's not intended to offer advice or guidance on legal, tax, or investment matters. Such advice can only be given with the full understanding of a person's specific situation. So as we present, if you've got any questions about anything that we're talking about, go ahead and pop it in the chat box. I think it works better than the question and answer box. And then once we finish the whole thing, we'll have a session where we go through kind of the more general questions and answer them on a one-by-one basis. So with that said, we will get started. So a little bit about myself and our firm. Our firm is Euro-American Financial Advisors. We're headquartered here in the hot Sevilla, Spain. We started our process of forming the company in 2019. It was slowed down a little bit with COVID. So we've been here somewhat of a new firm, but we're certainly not new to this. My partner, Tom Zakeistel, has used his firm in San Francisco Bay Area International Asset Management to help American expats for over 20 years. So you can say he's kind of seen it all over those years in terms of unusual situations and helped expats around the globe that way. And we're licensed with the Spanish investment authorities under MiFID to provide investment advice and financial planning. And our clients are specifically U.S. expats, and we like to help them both, navigating becoming an expat, and then as well as maintaining all of the complications that arise once you are an expat. So what we're going to cover tonight, I'm going to talk a little bit first about some roadmap issues, we call it, a blueprint becoming and maintaining your situation as an expat. Margaret's going to talk about some U.S. tax considerations when you're living in Portugal from a U.S. standpoint. And then Raquel's going to talk about the Portuguese tax considerations for U.S. expats. And I'll close it out with some financial planning notes. What is a financial plan? And some expat specific situation. So this slide, U.S. expat checklist. This is something we do with all of our clients when they first come on board. And it's all about, confidence, peace of mind, helping you feel good about your situation, know that someone else is taking a holistic view and coordinating with kind of your financial team to make sure everything is looked after. So we've broken it down to issues related to moving abroad. If you're living in the U.S. and you're planning a move to Portugal, you might reach out to us, 6 months to a year in advance, planning your situational change. We've got issues following the move, and then kind of ongoing issues here on the right. And this is just kind of for presentation purposes, but I think it's important to sit down with our clients and really look at anything that might affect any of their other financial situations. So for example, a visa, we don't deal with the visa ourselves. Someone like Raquel would. But what we do is we sit down, we have an initial call, and we go over anything that your move might impact in terms of your taxes, your financial portfolio, anything that another team member might need to know about. We consider ourselves like the general practitioner. So you come to us first, we then direct you to someone else who might be able to help you better. Kind of as an anecdote, we had clients who were planning a move to Spain. They joined us probably halfway through their window in terms of they planned to move. They started the visa process. So what we did is we sat down, we worked with our partner law firm in Madrid, and we found out that on this initial call that once they started their visa application process, a new visa similar to the Nomad visa in Portugal had become available, and it would have saved them a lot of money if they've gone that route on their tax returns. So they actually changed their process. It was a big win for them. So I think it's important to have somebody kind of looking at the whole situation to make sure everyone's on the same page. Some of these other issues are more of a checklist. We don't need to go into too much detail, but we have gestores here in Spain. I'm sure in Portugal there's a similar situation to kind of help navigate the bureaucracy of getting a residence permit, getting fingerprinted, all those types of issues. Real estate, that could be a presentation in and of itself, but in terms of working with someone like Raquel who can help you negotiate your contract, look at from our standpoint, from a financial planning, is it better to rent or to buy? What's the long-term implications of both? And then also, if you have a house, say in the US, you've been a tax resident in Portugal for 20 years, and you decide to sell that house, how does that impact your US taxes? How does that impact your Portuguese taxes? What are you going to do with those proceeds, in terms of an investment account? So I think this checklist, is a good idea to kind of keep everything in a big picture view that we have an eye on. And then you can see the rest of these. I won't spend too much time on them. Learning Portuguese, anyone who's lived in another country knows it's quite beneficial to be able to communicate once you get there. A big one for us though is this one right here, filing US and local taxes. So I'm not going to talk too much about it, as our partners will, but that kind of impacts a lot on our side, what we need to do. So having somebody who communicates with your permission with both of your other providers can help avoid any surprises. And then this one, working with US brokerage account issues. A lot of times, once you decide to move abroad, you might tell your US custodian, hey, I'm moving to Portugal. They might say, no problem. But then when they run it through their compliance department, it might turn out that, in fact, they cannot work with you anymore. They'll tell you they're going to either freeze your account or make it so you can no longer place any trades. And that's often when clients kind of reach out to us with, what do I do next? So we have different brokers and custodians in the US who we work with, who are used to working with expats. And as long as they have someone like us, an advisor kind of as in between them and the client, they're happy to continue to manage your account. Then maintaining bank accounts, in the US, sometimes that's better for a lot of reasons. If you're receiving a pension check from Social Security or something like that, we have some banks we can partner with on those issues. And then, I won't go through all of this, but more issues related to once you've been an expat for years, there's still things that we need to update, keep an eye on, ongoing issues as well that are relevant to anybody, helping parents or children with financial issues at a distance can be difficult sometimes. You've got paying tuition payments or different areas like that. And then the last one I will talk about is currency transfer. So as an expat, you have to be aware of the currency risk in your investment portfolio accounts, as well as, what's the most optimal way of physically moving the money. Is it better to do it with a currency broker, better to do it with your traditional broker? We'll talk more about that later on. So now I'll turn it over to Margaret to talk some more about some of the US tax concepts. Thanks, Margaret.
Thank you, Shane. Hello, everybody. I'm Margaret Conklin. I'm here in Cascais, Portugal. Moved here from Switzerland 5 years ago. I am looking forward to my retirement. So over the last couple of years, I've been working with Jason Matthew, who is also on the call. He will be taking over our advisory and compliance work as I start to slow down. So JM Tax Advisors is the name of our firm. So you'll see the logo here after we talk a little bit. But as I was thinking about what I wanted to talk about today, the first thing that came to me is, now that you're an American in Portugal, it's important to realize that there's a lot of uncertainty between the US income taxes and the Portuguese income taxes. And that's because Portuguese income taxes were not built on top of the US tax laws. They're not built to interrelate to each other. So there's still a lot of questions, you know, things that you are very certain about in US income taxes. It's not in the Portuguese law. So you just have to understand that you do have to coordinate and understand the Portuguese side of it first. Both Portugal and the United States tax you, the Portugal resident, on your worldwide income. It's not a, oh, this is from my US brokerage account, so it gets, I pay tax in the US, and this is my rental income from Portugal, so I pay tax in Portugal. That's a typical misconception I run into a lot of time, that both countries are ask for your full worldwide income. Under NHR, as you know, some income is not taxed, or it's taxed at 0%, but it's still reported in Portugal. So try to avoid the idea that this is US, it goes on my US return. It goes on both. And a lot of people, same thing as a overall concept, they tend to say, oh, well, there's a tax treaty. And that tax treaty, it's not really written for American citizens. At the end of the day, way down, you know, in Article 22 or 25, it basically says, if you're an American citizen, ignore everything that you read above this. So it's good to understand the basic concepts, but for an American citizen or a green card holder, you've got to understand that you will pay the highest amount of tax, be it to Portugal or to the United States. And the mechanism that we use in the United States to equalize this is the foreign tax credit. So many of you are probably aware. So you file your Portuguese tax return, they compute a tax. That tax is generally a credit on your US income tax return. So it reduces your US income taxes. So in my mind, and a lot of advisors' mind, that means you have to prepare and complete your Portuguese income tax return first in order to properly have the right foreign tax credit for your US income tax return. I know I get a lot of questions about that. Which comes first, the chicken or the egg? And in my mind, Portuguese taxes come first. Now, under the foreign tax credit form, there's two methods for reducing your US tax. One is the cash method and one is the accrual method. So the cash method basically means, so my 2022 income taxes in Portugal will be paid in 2023. So you would not, under the cash method, those taxes would be a credit on your 2023 tax return. I generally find it's much easier to be on the accrual basis. So your 2022 Portugal taxes show up on your 2022 income taxes in the US. So it's better matching. But that's a good concept to understand the differences in the foreign tax credit. A couple of other comments that people ask me all the time is the basic compliance issues. Your US tax returns, once you move to Portugal, you get an automatic 2-month extension. So you can now forget about April 15th. It's now a June 15th deadline. So we're coming up on that June 15th deadline, and you say, but you are still supposed to have paid your income taxes by April 15th. So again, you've got a wavy road that you're still supposed to pay your income taxes by April 15th, but the returns are not due by June 15th. So the best that you can do is make estimates. You know, if you overestimate, you can always ask for a refund, or you can apply it to the following year. If you do not pay it by April 15th, they will charge interest now and it's up to 7%. So it's a lot more painful on that underpayment of interest between April 15th and June 15th. Starting June 15th, then there's late payment penalties of 5%. So, pay early and don't have any surprises come October 15th when you get around to filing your return, or December 15th if you want to extend it another 2 months. Another big comment I want to make is about sending your tax returns in. If you do self-prepare, if you're still mailing paper checks, remember when you put a piece of paper into the Portuguese post, the date that it is received by the IRS is the filing date. That this idea of putting it in the post on April 15th, it doesn't work from Portugal, because US tax laws say you can put it in the American post. So US Postal Service, that if you want it filed on time and you're close to the due date, you need to use one of the 3 overnight delivery systems, which is UPS, FedEx, and DHL. Those are the only 3 overnight services that the IRS approve. So be careful if you start dropping things in CTT. Just another quick comment. I think Shane's going to speak a little bit about foreign investments. Again, if you're not investing your money in US tax compliant investments, be it US mutual funds, US ETFs, you could have some big surprises when it comes to tax time. As I say, just Google the word or the acronym PFIC, PFIC, and everything will say if you're an American, you don't want to get involved in these things. And the other most important thing I want to mention, as an American citizen, you are still living in Portugal, you're still underneath the estate tax rules of the United States. But if you do have a non-resident alien spouse, be very careful, because there is not an estate tax treaty between the US and Portugal. And this can cause some pretty terrible tax liabilities if the American citizen dies first and the non-resident alien dies second. So be aware of that. I've seen some terrible results. And my last thought was going to be go back to coordination and communication, which Shane talked about, that you've got to coordinate ahead of time and communicate between your Portugal accountant, your Portugal attorney, and your investment advisor. And then the other, yeah, Shane, if you want to go to the next slide, I've just got a couple of websites there that I wanted to mention. IRS.gov has got a bunch of great information on it. Don't be afraid to look. The information there is much more, much better than some of the things you can read searching around on social media and on blogs. The next one is the link for the FBAR. Always remember, you need to file your FBAR if you have more than $10,000 in total. It's not per account, it's in total in your non-US bank accounts. And if you want to make a payment, you can still pay with your paper checks, but the best way to pay is at irs.gov/payments. You can take an automatic draft out of your bank account, or you can pay by credit card. So hopefully those are a couple of good links to help you with your tax compliance. And on to Raquel.
Thank you, Margaret. Thank you, Shane. It's a pleasure to be here with all of you today. And I will try to, maybe before that, I'll introduce myself. My name is Raquel de Esteves. I am a Portuguese lawyer, fascinated by taxes and mainly international tax situations. It's really interesting to cover these areas, and everything is constantly changing. So we all need to keep studying and keep updating ourselves on both sides, in this case, US and Portugal. What I've been doing in Portugal in terms of assisting Americans and other foreign citizens moving to Portugal is basically trying to provide an assistance covering the immigration, the tax side, and some investment side in Portugal as well, namely in real estate. And what I typically point as a first topic that must be addressed is taxes. Everyone should understand the tax implications of the move. And this should be done even before choosing the type of visa. No one should be going for, let's say, a golden visa if the person actually wants to be a tax resident in Portugal. It would not make much sense for me in principle. Or if someone is choosing to go for a remote workers visa, they should first understand how their salaries or their professional income would be taxed in Portugal, although it is a remote work visa. So typically people think there are special tax regimes related to visas and so on. So my advice is start with the taxes and the financial side to make sure you really want to make this move to Portugal or to any other country. And the relocation would be smoother if you started from the correct point of view. So what I would start by clarifying is that once you move to Portugal and you have a residency visa, even before you have your residency card, if you already have a house available for you to live here, you should register as a tax resident, okay? It's not an automatic registration. It's not because you have residency, immigration residency, a title, that you will be automatically considered a tax resident. You should do that registration, and there is a proper date in your specific situation. Therefore, you should try to comply to have it correctly done and aligned from the beginning. The other topic I'll also stress, Margaret already told you about this, but I think it's never enough to say, Portugal taxes citizens based on residency and not nationality. It doesn't matter if you use your foreign bank account to receive a specific type of income. It doesn't matter if your salary or your interest is paid in South Africa bank account, Singapore bank account. It is not relevant. This is really, really a common mistake. In Portugal, even if you fall under any type of exemption or special tax regime, you should report your worldwide income. And also, it's a very interesting thing. In Portugal, you do not report assets. You don't report that you have a house or you have a boat or whatever it is, but you should inform the Portuguese tax authorities of your foreign bank accounts, not the amount, not the specific amount or balance, but you should inform of the number of your accounts outside of Portugal. And there are penalties for that if you do not comply. This said, I think we can give a special note to the NHR tax regime to mention that from the moment you start being tax resident in Portugal, you have until March 31st next year to apply for the NHR. Otherwise, you may lose the chance for good, or you need to start a litigation process, and it is uncertain if you will succeed getting the status or not. So our advice is do your best to comply with the application deadline. And this special tax regime, it is not an automatic exemption on everything. It relies on the Portuguese law, double tax agreements, and even foreign law in terms of how to qualify types of income. So seek for advice. Don't trust everything you read online. Seek professional advice, if possible, on both sides, Portuguese, US side, to make sure you are making the best informed decisions. Once you are a tax resident in Portugal, we have partial tax residency year, meaning when you start, if you start living in Portugal, let's say in May, that is your start date of residency, you should report income obtained from May to December. Our tax year runs from January to December, and tax returns are submitted the next year from April to June. And if there is any tax to pay, it should be paid until August, the year following to the income. Good, thank you, Shane. This is the general framework of the NHR benefits. This should be seen as the potential benefits. Okay, each case is a case. There are conditions for these exemptions to apply on each specific type of income. And there are several other rules that are relevant. Economic substance rules, CFC rules, several other aspects that you need to consider. So don't take this 0% as a certainty. As Margaret said, uncertainty is the key word here. You really need to look into your specific case. For instance, if you decide to have a company outside of Portugal and maybe distribute dividends to you, it's a very common structure in Portugal. To benefit from the exemption, you need to make sure your company is really a company for the purposes of the double tax agreement. So it should be an entity paying corporate tax abroad. You should be aware that having local management is crucial. You should be aware that having economic activity, it's crucial to achieve this exemption. I will not go through all these topics. We have agreed to focus more on the investment side for now. So, and maybe soon we can do another webinar covering other topics of interest to you. But we would like to make a quick note on capital gains, to say, to explain how it works between Portugal and the US, and to say that the tax regime in Portugal from this year on will be on long-term capital gains, a fixed tax rate of 28% continues to apply. On short-term capital gains, the general rates will apply from this year on, so you need to prepare. It depends on your level of income, so there are some particular questions to address here, but you can consider this as a general rule. And under the double tax agreement signed between Portugal and the US, if it was not for the nationality, the capital gain should only be taxed in the country of residency, Portugal. Therefore, the NHR exemption are not being automatically applied by the tax authorities in Portugal. However, when we have US nationals, as there is also taxation in the US, we are aware that the arbitral courts in Portugal are granting the right to this exemption. And therefore, it is something you should explore with your tax advisor or your accountant to see if in your particular case, it would be better to pay the 28% in Portugal and maybe deduct it against other taxes you have in the US. But as the 28% is actually a very high rate for American citizens, it may make sense to get the reimbursement in Portugal, even if you need to present a claim or similar. And we also would like to note that there is a fixed rate of 10% on pension income in Portugal. And one of the most common analysis we sometimes need to do is what should be seen as pension, what qualifies as pension for the purposes of this regime and the purposes of the Portuguese tax law. So again, it's uncertain. There are no binding opinions issued yet by the Portuguese tax authorities about the most common pension plans and pension schemes. We always need to address these questions in detail, looking into both jurisdictions and the international agreements to be able to advise you. Shane, I think we can move forward. Okay. I'll just quickly go through some of these questions, which maybe most of them I have already answered, but financial advice and tax advice are really important to take from the beginning. Keep that in mind. The most common problems we see are because people came to Portugal, arrived, registered, started their lives, and then they find out about a few things that they could have changed from the beginning and avoid the tax impacts. Keep in mind that the NHR does not mean a full exemption for 10 years on everything you earn abroad. Okay, there are types of income that are excluded from the exemption. And even for the types of income that can be exempt, there are specific conditions, and you should cover that as well from the beginning. And the qualification of the income, that is exactly what I meant about pension income. Sometimes you call pension income or dividend distribution in the US something that in Portugal is not exactly a dividend or is not exactly a profit distribution. Sometimes we have different names for the same reality, and it may have tax consequences, okay? Income distributed by funds, it's a good example. Sometimes there is a dividend distribution from a fund, and for Portugal, it is not seen as a dividend if it is a fund, and the fund is not treated as a company. So it's super relevant to pay attention to these details. Reporting obligations, exactly. So bear in mind that you need to report all income, even though it is exempt. And one other common question is what is the country of source in a specific transaction? Because you may have a US broker, but you have shares in Hong Kong companies or Singapore. It is important to determine correctly what is the source of that specific kind of that specific income on that specific transaction. So those are the details I would like to alert you for today.
Great, thanks, Raquel. I'll jump back in. So going back to financial planning, some of you may be familiar with what a financial plan is, some of you may not, so I'll give a brief kind of overview. But I think the important aspect here is, as an expat, a financial plan can be very, very important. So we think of a financial plan kind of in two ways. There's the number side of the plan and the non-number side. The non-number side is helping you achieve your goals, what your plan is in life. So if you want to retire, have a beach house, you might want to put your kids through university. That can be expensive, especially if they're in the US. You might want to, do anything down the line, help a grandparent, whatever it is. These types of things need to be planned for and paid for. So the number side of the financial plan is how do we achieve these goals? So we prepare 3 different statements: a balance sheet, statement of cash flow, and an income statement. And then we project those into the future to see what your income and revenue streams are going to look like. Also, as an expat, you might have, we come across some very unusual situations. For example, if you inherit money from France and you're living in Portugal, how does that impact all of the different components and team members They need to be aware of these types of things. We incorporate these types of things into the plan to have kind of a blueprint of your situation and plan for, helping you achieve your goals going forward. So on the number side, something that we also keep in mind is you might do a risk profile and think that you need to be quite aggressive. And then after we look at your financial plan, maybe you have more money than you thought you did, and we can be a little bit less aggressive in your investment accounts. And then we also look at different scenarios. So when we build a plan, we sit down, we have someone dedicated to doing this, and they send you a questionnaire. You have a lot of different questions you answer about your life, your finances, and then it helps you determine, what maybe the best choices in different scenarios. Buying a property versus renting, over the life of that project, what's better? Planning for retirement. Again, I was talking about how aggressive or how conservative you need to be in your investment accounts. And cost of living change. Once you become an expat, as you know, there's a lot of changes. There's a lot of different expenses, and it's important to plan for those. We want to avoid any types of surprises. And then I just have some other examples. Funding grandchildren accounts. What's the best way to do that? What's the best way to save money that way? How do we plan for it? Inheritances, your estate plan as well. And then I think all of this kind of helps inform us on the investment account portfolio itself. How we formulate that. See if I can advance here. Another big issue in the financial plan is custody. So we talked a little bit about this before, but where you custody your assets. So typically, if you're living in the US, of course you custody in the US. You move overseas, some people think, well, I'll just move my accounts, it'll be easier. I'll custody abroad. And this is something that Margaret talked about, these passive foreign investment vehicles. So if you were to custody in Portugal with a local private bank, for example, and you went to them, they'd be happy to sell you different diversified products, mutual funds, exchange traded funds, even in some cases, money market funds, but they're held in Portugal. So those are treated quite punitively on your US return as passive foreign investment vehicles. So what we always say is custody in the United States. We have a couple of different custodians we have good relationships with. It's much lower cost. The next item I talk about is tax reporting. Margaret's going to be much happier preparing your taxes if you have 1099s. You have all the forms that you need for the IRS, and you prepare those at the end of the year. Year-end reporting as well. The US brokers really segment how different types of earnings are generated, and it's much better. I talk about safety. In the US we have this SIPC insurance that doesn't exist over here in the same way. So it's quite good to have that peace of mind with your investment account in case we have another financial crisis. Hopefully we don't. And then compliance, again, US reporting, FATCA, FBAR, if you're audited by the IRS. Just real briefly on FATCA, this came around in 2010. A lot of you are probably familiar with it. It's the Foreign Account Tax Compliance Act. And distilling this down to I guess its essence is that US and foreign financial institutions need to communicate with each other and with the corresponding tax authorities. And a lot of them, they don't want to do that for a small percentage of the business with US expats. So that's why it's hard to open accounts sometimes abroad. And then in the US, that's why it's hard to maintain your account, because the US brokers don't want to communicate that information abroad. So our recommendation there is keep your investment accounts in the US, use a custodian that you are already familiar with and can trust. Then some expat specific portfolio considerations. Currency, over here we use the euro, and recently the euro has done a little bit better, but in the past couple of years we saw with the US Federal Reserve raising interest rates much faster than any other country in the world, or even what we've seen historically for a long time. The dollar got much stronger than the euro. Now the European Central Bank has kind of caught up to the euro's gained some steam there. But if you think about anytime there's a geopolitical event, the local currency is affected. When the war with Russia started, the euro got a little weaker. When the UK did the Brexit, The pound got significantly weaker. So these types of things, as an expat, now you need to be aware of your currency risk. So we need to account for that in your investment portfolio. Something we do is we match the currency denomination of investments with your expenses. So if you're living in Portugal, your expenses are going to be in euros primarily. So what we want to do is not have all of your money invested in dollars. Imagine if the dollar had a significant downturn, then you might be receiving a fixed income in US dollars, but your relative rate is going to be much worse in euros. So we want to match those and kind of account for currency related issues, down the line, so you don't have any surprises. One question we get asked often, avoiding PFICs. Can I own euro-denominated funds, but in the US, keep them custodied in the US? Absolutely, you can. We work with brokers who quite uniquely offer multi-currency accounts, so you can hold euros themselves. You can hold funds that are denominated in euros. You can hold US funds that are denominated in euros. There's lots of options there. And there's kind of two ways you can have euro exposure directly, which would be owning physical euros, or exchange traded funds that are denominated in euros, or indirectly, meaning European companies who receive most of their revenue from the euro. So we say invest in a diversified multi-currency global asset portfolio. And then just some more general portfolio considerations. For everybody, we say you need to be diversified. We need to account for some of these additional kind of expat risks, and a lot of the risks that might not necessarily be in your investment portfolio could be from being an expat. So tax issues, we like to kind of make sure everybody's on the same page with communication there. Expenses are always going to be lower in the US. In the US, you're used to not having trading costs. Here, if you trade your entire portfolio at a private bank, it's not uncommon to have like a 1% fee for the trade. Whereas in the US, in many cases, there's no fees for trading anymore. Custody costs are much lower. Fund costs are much lower. Advisor costs, everything. So we say, what can we control? Well, you can control fees, you can control risk. So let's keep an eye on those. And then tax management, in addition to what everyone else has said, we need to keep in mind how the portfolio is managed in a tax efficient manner, and building a long-term strategy and sticking to it. We've seen a lot of volatility the last couple of years in the market. It's important to talk to your advisor if you feel a panic about that, and let them kind of walk you through the financial plan. Why do we take this risk initially? Look at some historic returns and just feel more comfortable with kind of writing out the plan for the long haul and not missing out on some of those gains. So questions for your investment advisor. This is what we say: you should do your research, you should decide who you want to work with, and then have a lot of knowledge about the situation. So one way to do that is asking, are you a MiFID compliant advisor? So are you registered in Europe to advise US clients? With which regulatory body? How can I check? So our firm, for example, we're registered with the Spanish investment authorities. You can go to the CNMV's website. You can see our bios, our company, our track record, things like that. I think it's pretty important. And then what is your background? You can ask your advisor, what's their academic experience? Are they knowledgeable about finance, investment markets, economics? You can look at their licenses, their designations, their investment philosophy, their approach to continuing education. This past year, I did a EAFA, European Financial Planning Association, learning more about MiFID and some of the clients' rights living in the EU, which are always good and better for them. And then how are you paid? Are you paid by selling products? Are you getting commissions? Are you paid performance fees? Are you paid by products? Instead of versus the client paying you for your services, are you paid a kickback? Is that can kind of disalign incentives for your advisor to take more risk if they're paid by a performance fee, or if they're paid by a specific family of products, they might only push you into those. And the last point here is, are you an expat specialist? So how do you manage currency risk? You can just see, what sets them apart in understanding some of these specific US expat circumstances. And if you haven't paid attention to anything else I've said, this is time to tune back in. So mistakes to avoid, PFICs, don't buy them. Don't buy foreign mutual funds. They're just going to complicate your US returns. You're going to pay more without getting any positive gain from it. Buying non-US compliant insurance. I won't go too much into detail on that. We don't sell insurance products, but for example, if you were to buy life insurance in the US, it might not apply if you were to die overseas, or if you bought even health insurance in the EU, it might not cover you if you travel back to the US. So you want to keep an eye on that. Over investing in your country of residence. A lot of folks think, hey, I'm moving to Portugal, I want to invest locally. They do buy these PFICs, but even if they don't, they want to own Portuguese companies. And we always say, you still want to be diversified globally. You still want to have a nice mix of assets. So don't do that. Not using an expat specific tax preparer. I think after tonight, we don't need to go too much more into detail there, but it's extremely important to avoid negative financial surprises for your total long-term financial wealth. So paying high fees for foreign investments, which you could have bought in the US for less, won't go too much more into detail there. Failure to report foreign financial assets on US tax returns. This is very important. I know we touched on this a little bit, but especially with digital nomads, moving to Portugal to work remotely for a US firm. Maybe you set up a company in Portugal and you don't report that on your US returns. That's something to avoid. The last point I have is do nothing. I know this can seem overwhelming, but it's important to be proactive. Do your research, make informed decisions. Ask people who dedicate their career to these types of questions, and then just enjoy it. Enjoy your expat adventure and let us kind of do the worrying for you. So with that, I will end it and we will jump into the Q&A part. Let's see. The first question is, will the recording be available afterwards? We can make that available. We can put it on some of our websites and see if you want to click on it and check in, down the road. What is NHR?
I think this one is for me. Sorry, I should have been clearer. It's just a problem when we assume everyone else is on the same page in Portugal. So the NHR is the non-habitual resident tax regime, is a specific tax regime for newcomers. The name was not well chosen, so it's in fact for residents in Portugal, tax residents in Portugal. Although it's called non-habitual, it's related to the fact that you have not been a tax resident in the previous 5 years. And if you have not been a tax resident in the previous 5 years, you are eligible for this NHR status, okay? Having the NHR status and having the NHR approval itself does not grant you a specific benefit. It is like a regime, a tax regime with several rules, and being approved means you can qualify for that benefits if your specific types of income are eligible. So the work here is to understand if your specific sources of income and the way you have structured your income streams are eligible or not for the specific benefits. Okay, it's valid for 10 years. It's not renewable. Although we think that after 10 years, in fact, there is no reason why you cannot live for another 5 years and try to apply again. We have not yet had enough time to try this because the regime is only in force since 2009. We will get there soon. Shane, you are muted.
Oh, yeah, that'll make it harder. The next question was about contact details. So I'll share my screen here. Everyone can see contact details for all of us. These are our websites. And then after the presentation, we'll certainly send around an email with our email addresses if you want to get in touch that way. Here's another question. If you were to save on taxes in Portugal, for example, 20% cap, but you usually pay more in the US as a US expat, would you still likely end up paying the difference back in the US?
I'll take that one, but yes. So for example, you prepare your U.S. tax return, and let's say you're in the 28% bracket for your salary and your earned income. If you pay 20% to Portugal, then in general you would receive a tax credit of that amount on your U.S. return, and you would owe the U.S. the extra 8% if you were in the 28% bracket. And the opposite, if you were in the 15% bracket, you would pay Portugal the 20%, and you would have what's termed excess foreign tax credits that would carry forward for 10 years. So you may never be able to use them, but they are valid for 10 more years.
Okay. Here's the next question. If you missed the NHR application deadline, how likely are legal challenges to override and correct this situation? Raquel, you're muted now.
Sorry. I'll not say it's easy, because there are, it is needed, unfortunately, for you to appeal against a denial. And at the same time, because this appeal may take a few years, at the same time, you need to appeal against each tax bill, each tax statement you will receive in the following years without the NHR. So there will be a period of time where you will need a lawyer in your life, very present every year to submit a new claim and a new appeal, which can be, of course, quite expensive. But there have been success cases, and it makes sense to at least give it a try. Maybe look for legal advice and try to see if in your case it would worth the effort. Yeah.
Okay. The next question is, are there any other tax strategies as a US expat aside from FEIE if we still want to spend more than 30 days in the US calendar year?
Yes, definitely. That 30-day rule is often misunderstood also. The 30-day rule is more for the first year that you leave the United States and become a Portugal resident. After, say, in year 2, once you receive your residency here in Portugal, that 30-day rule does not really impact you to the degree that you're thinking. Once you become what they call a bona fide resident, you don't have to worry about that 30-day rule. However, say you go to the US for 6 months and you earn half of your income while you're in the US, that income does not qualify for foreign earned income exclusion. But if you go to the US on vacation and do not earn any money while you're there, the 30-day rule does not impact you at all.
Okay, here's another one. Is capital gains or interest in the US IRA or US Roth IRAs subject to tax in Portugal under NHR?
We knew these questions will come. I don't want you to find my answer evasive, but really it is really important to explain that on the IRAs and the Roth IRAs, there is no yes or no answer. It is not certain. We really need to dig to understand what specifically would be the best approach here, because there are a few valid lines of interpretation. I must say I tend to adhere to the theories saying that this income should qualify as pension income and be treated as pension income in Portugal, but there are also valid arguments to say this is investment income, and therefore in that specific case being taxed or exempt under the NHR as types of investment, capital investment income. I don't know if Margaret maybe wants to add something here, but I would say this is a topic that for sure needs specific tax advice.
And local tax advice, yeah, Portuguese tax advice. That what I've seen, and I'm going to say in general, if it's distributions from an IRA, I see most tax advisors saying it's taxable at the new 10% rate or the old 0% rate if you've been here a long time. But the distributions coming out of the IRA are generally taxed at 0 or 10%. I haven't seen a lot of people trying to pierce the shield and try to tax what's inside the IRA bubble, if you will, or the wrapper.
Exactly. It's similar, like what happens in Portugal with Social Security funds. In fact, we have our money being paid by Social Security, but Social Security itself, they have investments. They manage the money in some way, and that doesn't mean we actually have the capital gains or the interests from the management that is being done in the funds. I think that's it.
Okay, this one's somewhat related. The 10% tax rate on pension income, is that regardless of NHR status or only for NHR?
It's only for the NHR. The tax rates in Portugal on pension income are the general tax brackets from 14.5% to 53%. So they vary depending on the level of income. And this is what applies to, let's call it, normal tax residents in Portugal. So the 10% is actually a significant benefit to NHR holders.
And Raquel, that 10% started just a few years ago. Was that like March 31st?
March 31st to 2019. So everyone who has the NHR, who had the NHR before that, still qualifies for the exemption. The rule changed, entered the change just for new applicants. So anyone applying after March 2019 has now a fixed tax rate of 10% on foreign pension income.
Okay. Here's another one. Is it possible to remain a W-2 U.S. employee abroad, or in most cases, does everyone need to switch to a 1099, likely via an LLC?
I can jump in. It is possible to have to work remotely from Portugal under an employment contract, the W-2 in the US. It's not against the law, it's not illegal. Everything, if the work is provided from Portugal and it's remote work, the Portuguese tax authorities have already clarified that this is taxed in Portugal. So Portuguese income tax should apply if you work from Portugal. The only problem we have is with Social Security. So it may be difficult to comply with the Social Security payment requirements if you keep your employment contract in the US. And your employer does not have a branch or a parent company in Portugal. There are ways around it. One of them is to ask for the company to register. Another one may be to use an umbrella company for your payroll in Portugal. Or you can choose to become a freelancer if it is a good option. It may be a good option from a tax point of view for the first years. The LLC, that's also a very gray area. We also knew this is coming. It will depend. Under another binding opinion issued by the Portuguese tax authorities, it is now clear that income distributed by an LLC, a transparent entity, is not a dividend. Okay, this is something that is important for you to be aware. It should only qualify as a dividend income distributed by companies, and by companies we understand entities paying corporate tax. Not being a dividend, being a profit distribution, it may be exempt or may not be exempt depending on the double tax agreement. And I would say also depending on the level of economic substance you have in the US, who are the partners of this partnership. There is no straight answer here as well. Margaret?
I would concur. So it's uncertainty, and every answer is going to depend on exactly your facts and circumstances, and a little bit the level of risk, I'm going to say, that you're willing to take. Mm-hmm.
There's a follow-up question here to the previous one. Based on the answer to the last question about pension income, if you retire after your NHR period expires, your pension income is taxed at the regular Portuguese rate. Is that correct?
Correct.
Trying to answer mostly the general questions for everybody. Something that wasn't brought up was tax implications on moving personal items to Portugal. I read there's only 1 year to move items without paying a 40% tax on them. Is this from attaining residency card or fiscal residency?
It's not my preferred area of expertise, but yes, there is you are not supposed to pay taxes on the importation of personal goods. And for some specific goods like importing cars and so on, you have a 12-month period of time to bring that assets to Portugal without paying the importation tax. I don't know, Margaret, if you have more experience than me on that specific topic.
No, but basically the same, that I think there is a limit, but I'm not familiar with the details of it. So
and the change of residency date to start calculating that should be the date on your immigration title, your residency certificate, or your residency card.
Okay. And what about 401ks? How are they treated?
I would say exactly the same thing we said about the IRAs would apply here to the 401ks. The same level of uncertainty.
Okay. Here's another question. What about kids who are under 18 that are receiving Social Security from a deceased father and they don't qualify for NHR but are minors? It could be a specific
Yeah, very, very specific question. That it is true that people under 18 cannot apply for the NHR, which should be corrected because people under 18 can have income. But in fact, this income should be included and on the parents or the tutor's tax return. Although not covered by the NHR rules, but I would be happy to explore this case later. It's very interesting.
Okay, it seems like most of the general questions. Question for Margaret and myself. How do you enjoy living in Portugal compared to your birth countries?
well, it's great. I mean, Portugal, yeah, there's sunshine and fresh air, and one of the best things about living here is all the people are so kind that you just can't believe how nice the people are. And yeah, it's been a dream of mine for a long time to live here. So I hope. Unfortunately, I was here for 2 years of COVID, so I didn't get out as much as I should have. But so we've been here right about 5 years, and it's fabulous. No complaints, and looking forward to the next 5.
It seems like those are all of the general questions. Anybody has any other ones? I think we'll leave it there. We are planning on organizing something a little bit later on in terms of, more specifically relating to businesses in the US and people working abroad. So watch out for another event on that. We have our contact information up on the page here. If you want to reach out to any of us for a specific consultation, as well as signing up for our newsletter, things like that. But thank you for sitting through this tonight and listening to us. And if anybody else has anything, I think we'll leave it there.